The money in your bank account does not actually exist, not in the way you think it does. It is not paper resting in a vault. It is not coins stacked somewhere with your name attached. It is not even truly digital. It is a promise written in numbers, backed by belief, enforced by law, and stabilized by a global financial framework so deeply embedded that it feels like nature itself. You wake up, you work, you get paid, you spend, you save, all without ever touching money. What you are really doing is participating in a system of trust, a system that only works as long as everyone agrees not to question it at the same time. Every salary, every mortgage, every government bond, every emergency bailout, all of it depends on confidence. Confidence that the numbers mean something. Confidence that tomorrow will look enough like today. Confidence that the system will hold. This structure was never explained to you because it was never designed for your consent. It was designed for survival, born during chaos, justified by crisis, and preserved through repetition. It was meant to be temporary, a bridge across collapse. Instead, it became the road. And once you see that clearly, something unsettling emerges. The system does not exist to protect people. People exist to stabilize the system. That is the hidden truth. To understand how this treaty still rules the world, you must unlearn what you think money is. Money is not wealth. Money is not value. Money is coordination. It is a collective agreement, a shared illusion. For most of history, money was tangible. Gold had weight. Silver had scarcity. Grain had use. But tangible money has limits. Empires expanded faster than metal could be mined. Wars devoured treasuries overnight. Kings needed future resources immediately, and so intermediaries appeared. Goldsmiths stored valuables and issued receipts. Those receipts circulated. Eventually, they became money. Then came the realization: depositors almost never returned all at once. So the goldsmiths issued more receipts than gold they possessed. Nothing collapsed because belief held. This was not fraud. It was evolution. Banks formalized the practice. Ledgers replaced vaults. Trust replaced metal. Debt stopped being shameful. It became productive, necessary, modern. But trust alone cannot scale globally. Belief needs structure, rules, and above all, coordination between states. That coordination arrived after devastation. Europe after the First World War was economically shattered. Gold had fled national vaults. Currencies were broken. Inflation erased lifetimes of savings. Empires had fallen. Borders were redrawn. Confidence was gone. Leaders gathered not to rebuild cities, but to rebuild belief. What emerged was not only peace treaties. It was a financial doctrine. Currencies would no longer be strictly tied to gold. Central banks would control supply. Debt would be rolled forward indefinitely. This was framed as progress, as stability, as scientific management of money. In reality, it was a quiet surrender of constraint. From this moment forward, money no longer represented stored value. It represented obligation. Governments demanded taxes in their own currency. That single act gave money its force. You no longer needed gold. You needed compliance. Once nations accepted this framework, they became dependent on it. The treaty was never advertised. It hid inside institutions, inside laws, inside normal economics. And that is why it survived. Here is the mechanism. Banks do not lend existing money. They create it. When a loan is issued, new money appears, typed into existence. No vaults, no prior savings. When the loan is repaid, that money vanishes. But the interest does not. Interest demands new money. New money demands new debt. Debt demands belief. This is the engine. Governments operate the same way. They borrow money created by banks. They promise future taxes to repay it. When they cannot, they refinance. Crises occur when belief weakens, when people try to turn promises into reality at scale. Bailouts are not moral acts. They are belief repairs. Banks are saved because banks manufacture confidence. Citizens are managed because citizens consume it. This is why the system always protects structure over individuals. Not because of cruelty, because collapse is unacceptable. Nothing is fundamentally changed. Currencies remain promises. Debt remains permanent. Belief remains the foundation. Central banks speak calmly while creating trillions. Governments speak of responsibility while expanding deficits. Citizens are told this is normal, and within this system, it is. But awareness changes your position. Once you understand that money is a story enforced by power, you stop mistaking numbers for reality. You see why inflation erodes silently, why crises repeat, why savers lose and debtors endure. The treaty still rules because it must. The alternative is collapse. History does not repeat, it reveals. And those who understand the mechanism do not panic when the numbers shake. They understand the story.